folks, welcome to Serene Education. 22nd November 2012. I'm just going to go over the four majors this morning, and I'm going to be starting with euro against US dollar. Let's have a look and see what happened yesterday. Calling up my charts on the four time frames I trade: the weekly, the daily, the 4 hour, and the hourly. And so you can see quite clearly I've plotted all my points in here, and now I need to see what price is doing at the hard right edge. And yesterday, the second confirmed candle to the upside. In doing so, you can see there was a lot more buying power at the end of that candle. If I just zoom in, you can quite clearly see a lot of pullbacks over the past week or so, and in doing so, price reattempting this institution moving average here near term, as well as this major support and resistance level. So a hell of a lot of work for price to do in order to still, or to get over this magical area here of price support and resistance that we've seen over a number of months now. You can quite clearly see back here through September, October, we saw price when it failed at 1500 on the top side, reverting to the institution moving average and using her as support. Near term going into November, we saw that breakout and price falling to the downside and targeting specific points. However, we have seen a change in sentiment. We had a lot of indecision at the bottom end of this of this little trend, a lot of indecision candles, and then followed by a bullish engulfing candle. And since then, we've seen price reverting to the underside of this major support and resistance level, which also constituted to the underside of the institution moving average on our daily. But the weird one, and I say it's weird, a lot of hesitation on Europe at the moment now. Greece is a major talking point, but you'll still see the euro finding a reason to trade higher. Just trade the charts, guys. Don't trade sentiment or the fundamentals. It's a bit mind-boggling at the moment, but you can quite clearly see candlesticks. The last 2 days, a lot of movement intraday, but you can see that the trading range closing at the upper end of the candle. Okay, so that's telling us that price is still looking upside, favoritism, and sure enough, this morning on the Asian session, we saw price moving higher. Slight pullback at the moment, but if it stays above the institution moving average, stays above this support and major support and resistance level here, above this 12,8300 mark, the one I've marked out here, we should see price moving towards that 12,900 intraday up to the 50 period moving average. So look intraday, guys, as this being a potential target intraday, the 12,900. So on my 4 hour chart, I want to be made aware of that. And you can quite clearly see the 12,900 mark is just slightly above the institution moving average on our 4 hour time frame. So that'll be my intraday target for the time being, as long as price can maintain above that 12,8300 mark. Okay, 1283 is marked on my 4 hour, and that is my major institution moving average on my daily. So it's broken above that, a major support and resistance level, and it's broken above it. You can see the previous 4 hours, price has pulled back and closed. So from Tokyo Open to 5 o'clock this morning GMT, price has fallen since the breakout that we saw last night, and you can see quite clearly that the next 4 hour candle that's forming, we are seeing price still maintaining above 12,8300. As long as it maintains above 12,8300, we should look for consolidation, with the upside being more in favor. You can see quite clearly the CTC on either side. Our histogram, our template is telling us we should be looking for buying sentiment. It's broken above that major support and resistance level. We should now be looking for a consolidation. Look for a nice bullish engulfing candle on an hourly, a 30-minute, and then get in and then target that 12. To start with a 1288 with 1290 as our possible target intraday. Here's the hourly chart for the euro US dollar. You can quite clearly see the breakout that we saw last night, and then we had a pullback all the way through even the Tokyo session, and this morning at 5 a.m. GMT we've seen a slight move to the upside, and more happening at the top end of this candle here. Very indecisive, but bullish engulfing, and then prices just move slightly higher. The one thing to remember is, as long as price stays above 12,8300, we should be looking for targets to the upside. But in order to see the momentum moving price higher after this breakout, we want to see people getting back into this to show confirmation, and to see and to definitely give us an indication that price is happy above 1283 and we want to be going higher. So wait for a bullish engulfing candle. We don't trade tiny little ranges like this. We want to trade a nice big bullish engulfing candle. We get that, then we'll be targeting the upside at 1290 to start with. Get above 1290, then we should be heading all the way up to that 1300. Onto sterling, let's have a look and see what's been happening on this particular pair. As the same with its European counterpart, you can see price on sterling over here rallying against the US dollar over the past week or so, finding support on the institution moving average on our daily and moving higher. getting above this 15,900 mark, and now targeting to the 20-period moving average intraday. Targeting the 20-period moving average on our daily here. And as it stands now at the moment, now we are seeing negative sentiment. However, this pullback intraday, we should be looking for buying sentiment, i.e. daily, the hourly and 4 hours should be showing some sort of upside movement here, and the correlation should be happening on the strategy template. So we should be looking at potentially 1600 back on as our target, as we see the pullback getting longer and more against the overall trend. You can see the overall line trend at the moment now is still very much, intermediate trend is very much negative, and we'll be targeting 1600 for the foreseeable future. So intraday, we want to see price edging higher, and you can quickly see higher swings intraday on our 4-hour states that we should be looking for positiveness, and sure enough, you can see prices moving to the upside. The institutional, the histograms on either side are very much blue, and our candlesticks, and we got our bar candle, our arrow down the bottom. So back to the 1600, which is back to the institutional moving average, is our first target intraday for the time being. You can see quite clearly on this time frame now, on the 4-hour, you can see a pullback. So our hourly, we want to be looking for a nice little bullish engulfing candle to give us that buying sentiment coming through on the open of the European session this morning, and then going into the UK session to see if we can actually buy into the dips, and then, or buy into the rallies, and then we should be heading towards that 1600. Be aware though, the longer or the closer we get to 1600, the less likely we're going to see any further positive sentiment. As it stands now, when you see a start of a trend, you tend to see a lot of movement, like a lot of selling to start with. But as we get down to 1585, which is a major support and resistance level, you can see how prices become less jointed, less volume, and then you start seeing price moving sideways, which tells you that we're starting to see less buy or sellers in this case, and there's more buying contracts, and sure enough, we see buying on the dips, and then price moves higher. It'll be the same now as we head into a potential major support and resistance level, a nice psychological run over here at 1600. As we head into that, the initial start of this trend would be nice and positive, and then as we head closer and closer to this target, anybody who bought down here at 1585 will be taking all their profit at 1600. So as they get closer, take more and more off the table, which means that there's less and less momentum going forward, and you should see price getting there eventually, but not as strong as the initial move. Okay, just remember that. It's that volume I was telling you about yesterday. When floodgates open, you tend to find a lot more water moves a lot quicker to the start with it. As it travels over the ground or travels over the miles or kilometers, that momentum starts to dwindle. It's the same here. The longer the trend, the less momentum it carries long term through it. So just be aware of that. So 1600 is going to be our target intraday. Just to see if, just wait, be patient, wait for a nice bounce. You can see quite clearly the last couple of hours indecisive, especially the last candle, very indecisive, and you can see where price is trading now on this time frame. You can see a nice little consolidation. So if you wanted to, you could take the low here that states on the hourly chart all the way up to this little consolidation we've seen since the start of the Asian session last night, and you can see that price, if she cannot find the momentum or the sentiment and break above 1597 anytime soon, she will keep falling potentially. I say potentially because we don't know, it could bounce off the 20 period, but potentially she could bounce all the way back towards or fall towards that 23.6 mark. Okay, so, and then we could see price moving in, because here 23.6 is the last time we had a major hesitation on this time frame, prior resistance and support. So keep that in mind, guys. On to the US dollar Swiss franc. Let's have a look at this pair. As with its European counterpart, we've seen in that case the resistance level being broken on our euro against US dollar. Here, for the US dollar against Swiss franc, we've seen the total opposite. We've seen price breaking that support. So euro US dollar breaking resistance, euro Swiss franc breaking that support. And you can see the support over here being the institutional moving average here quite clearly. I've marked it in a nice black box, box trading. But clearly you can see how price has been ranging through September, October, and finding resistance at the 940, which is the institutional moving average on the upside. We had a nice break above it in November, and prices reverted, or pulled back to this area here at 940. So we were looking for price now to consolidate here, and then to see some buying power coming through. That has clearly failed to happen, as we saw two current candles, not yesterday, the day before. We saw a very not very much trading in this candle here, a lot of exhaustion, because you can see that price hugged the bottom end of the candle, and also at the same token trading below the institution moving average, but still at 940. So we still want a nice bearish. If this was to be a genuine candle to the downside, we still want to see another confirmation candle to break that. Yesterday's candle, we saw that initial move to the upside yesterday, and I think it probably took a lot of people by surprise, or got people stuck into this buying on the actual momentum, and you can clearly see that sentiment just wasn't really with it. And the beauty of the CTC was telling us we should have been looking for that, but the candlestick the day before that was telling us that we just needed the confirmation. Sure enough, we saw further selling sentiment coming through yesterday, and you can see that this particular candle, another exhaustion candle, trading lower than 940, lower than the institution, and at the underside of the institution. So prior candle trading lower than that after we saw support, then price pulling back but still closing lower. So this is going to be a little pullback, and sure enough, last night on the Asian session, we saw price reverting or trailing down towards that 50 period moving average, and now pulling back. As long as it stays at the underside of 940 now, then we should be looking for price to now fall to the downside, find resistance here, and then continue on a little journey on our intraday time frames back to price support and resistance levels intraday. One here noticeably at the price support and resistance level, which complements the 930 mark, which is this previous swing here, swing highs. So if we break in this trend, you can see also very, very important, we had higher swings, which was dictating upside movement. That's now being broken. We breached that now, with price actually breaking this and falling lower and breaking this major support and resistance level. So what we have here is potentially the start of a new downtrend. Okay, so my 4-hour chart, you want to see that. Okay, that's the candle yesterday. I think that they've caught everybody up, and I think everybody probably climbs into this thinking they'll probably go back up towards 950. And I'm sorry to say, but there was no true sentiment behind that. And sure enough, you can see, even if it's telling us, the CTC, this is the great beauty about this particular template. It told us that we should still be looking for negative sentiment. And as long as we're still trading below this major high here, we should be looking for negative sentiment. And sure enough, it actually proved to move towards this intermediate trend. The intraday trend, you can see capped out by lower swings, was telling us near term there was negativity. Upside movement, we actually broke that when that happened. You can see yesterday at 5 o'clock we had the candle, a very indecisive candle, but it broke this 940, and since then has failed to rally above it, and doing so targeting the institution moving average on our 4-hour time frame. Get below that as soon as possible, above this 937, then we should be looking intraday targets to the downside. We can take the low here of this uptrend to the current high that we saw recently, and you can see how it works. 23.6 is a 944. The 38.2 is the 940, which is our major support and resistance level. Okay, the 50% line, look where price is trading right now. Get below the institution, the 50% line here at 936, and then we should be targeting the 61.8, which is below us here at 933. Then below that, look at potentially targeting the 78.6, which is the last call stop. You can quickly see how she marries in quite nicely down here at 928. Below that, she'll go all the way back down towards that 920, which is the bottom of this consolidation box I'm talking about that we see on our daily. You can see how I'm putting this all together, guys. Very, very important. So, my hourly chart, what I want to see is a bearish engulfing candle closing lower than 936. If I don't see that on that chart on my hourly, then there is no trade. Okay, so there we go, 936. I'll put it in so I can see it. Got to be visually aware of these major support and resistance levels. That's where we're in price to trade through. That'll be my trigger line. So on my broker account, I will now go and place a alert below 936, 935.5. I don't mind, giving a bit more weight to the market, because I want to see that genuine sentiment candle. I want to see a nice bearish engulfing candle telling me, listen here, I still want to go lower. We have broken a 940. 940 is a major price support. It is now likely to be more resistance if we trade below that area, and then we want to see that sentiment now following through and taking us lower, and by doing so breaking 936, which will tell me I should be looking for the downside for the foreseeable future. Last pair of the day is US dollar, Japanese yen. Let's have a look at this particular pair. This is the one that's got all the momentum at the moment. The US dollar has been rallying against the yen all week, guys, all week, and started last week and is still going. We broke 80 last week, a major support and resistance level on our daily, stayed above the institution moving average. And I spoke to you guys yesterday. I mentioned, look at the sentiment on this candle. The movement has been so great that you can see the clear distance between these moving averages telling us that any major positive trend is going to show you a hell of a lot of momentum and a lot of space between each of these points. 20, the institution, the 50, a lot of gaps, and that's confirmed in price action. When it's going sideways, you can see quite clearly all the moving averages are quite close together. There's no momentum at all. It's quite stagnant, quite consolidative, and well, it just leads to consolidation and no in time invested, no real return, which is not what we're looking for. But here near term, you can see bullish engulfing candle, and it's just been pressing higher and doing so, moving to price support and resistance levels on our daily. You can see the prior shoulders here at the 81.50 and change, so 81.70 mark, moving into that yesterday at what time we're looking at there. Well, it's just the daily moving into that yesterday, and then yesterday taking from that. And I mentioned you've got to stay above this 80 part. If you can stay above here, then it's just going to the shorter the pullback, the more sentiment is still in this, and you can see quite clearly it's just now rallied into that 80. Funny enough, that 82.50 I mentioned yesterday, and now today it's got to find support above that. So as long as it maintains above 82.50, then we should be looking for price now to make that last move towards the 8400 near term. Okay, this is a steep move, guys. We saw that recently, well, back in early February of this year, a major move after some fantastic non-farm payroll figures for the US market. It was a short-term knee-jerk reaction, but you can see how much she traveled in a very short space of time, and it's doing exactly the same here. A very steep incline to the tops. So as long as it can stay above 82.50. Now, near term, we should be looking for price to continue on a merry way up towards that 8400 mark, which is a major support and resistance level on our dailies. So here we go. Quite clearly, if you wanted to take the low of here at the start of this trend to the upside, start from here. You can quite clearly see if you've gone for there, 23.6 was still in play. 23.6 was still in play. Fantastic moves to the upside. If you take a fib projection here from the low to this candle here, the pullback, you can see the 61.8 now in play. Okay, 100% is normally the ultimate target on here, and I can guarantee you the 100% is going to be very, very close to that 8400 as we speak. So get above the 61.8 on our 4 hour. So nice bullish engulfing candle. You can see the candle in play right now is attempting those highs. You can see a consolidation highs here. We've had 8s, we've had close on 20 hours of resistance here at the current place here at 82.50. So do need to see that being broken. We don't see 82.50 being broken anytime soon. Then there's more likelihood for price to stall here. We should be looking at all our indicators to show the momentum is starting to stall. MACD will show you that that type of thing. The histogram is getting smaller as we head into this. But you'll notice the uptrend here, intermediate uptrend is higher. And if we stall here, you're going to see price just ranging. It'll just range between 61.8 to 50, 61.8 to 50, all the way along here until we hit this trend line, and then we could see price moving higher. So if this is to remain positive near term, we do need to see this area here at 82.50 being broken as soon as possible. Get above that, and then we should be heading off towards that 8400 mark. If we don't break that intraday, then we'll look for consolidation to the downside to prevail. Hourly chart, you can see here 61.8 above me. Histogram very much blue across the board, showing me that sentiment. You can see now as price is moving higher, nice upward trend. You can see the moving average is all nice and clean, lots of air in between, especially the 50 and the 200, telling us a very strong trend to the upside near term. This is an hourly chart, which will make it nice and big. As you can see the trend line moving higher, fantastic. Now we just need to get above this 82.50. You can see in near term on the hourly, very small trading ranges, and you can see that over the past 20 hours or so, there's clear resistance above price at the moment now. And the longer she finds resistance here, the more likely the price is going to fail, and then it's going to revert to the downside. So we can see near-term targets here at 50%, which is just short of 82.25, and then back, which is back towards the institution moving average. Get below that and break the trend line. Sorry, not the institution moving average, the trend line. Apologies. So back to the 50 and the trend line. If she breaks that, then back to 38.2, which will be the 50%, and then the 23.6 is price support and resistance level here at 81.60. Get below that and you should be trading all the way back to the institution moving average here at 80. So very, very important. Got to get above here as soon as possible. Failure to do so, she will range. Okay. There's no the US market is closed this afternoon, guys. Bank holiday, so there's not going to be a hell of a lot of momentum. And what we want is momentum. So if we're going to see any momentum, it's going to be this morning. And then there's a hell of a lot of news out for the European market this morning. And we also have the Euro Summit meetings at the moment now, Euro Economic Summit meetings, day one. So big topic for them. I guarantee it is going to be Greece. Greece is stalling at the moment. Well, Greece and the EU cannot come up with a plan that suits both of them. And the longer that drags on, the more you're going to find that sentiment is going to weigh heavily on negativity for the European market. That's what we were wondering. That's why I was saying at the start of this video, I couldn't understand why Euro was still moving higher. The fact that Greece is now stalled, they still haven't come up with a definite answer on how they're going to actually tick all the boxes so that the EU can actually give them their next installment, bailout installment. They still haven't done that yet, and Euro is still climbing. So you can see how I think the news at the moment now is trading very much risk averse. I think they're still very aware that the US market is also in some really dire issues. There's also this fiscal cliff that everybody's talking about in the US. Bernanke didn't really do well by actually referring to the other day that they didn't see the US market and the Fed having really much or any tools available, inverted commas, to really help with that fiscal cliff. So that doesn't really bode well. If Bernanke is saying stuff like that, then it doesn't look really, really well. So I think everybody at the moment thinks that there's still less risk in Europe, and there's more risk attached to the US dollar, and hence the reason why we're seeing the moves that we are currently seeing. So be aware of it, guys. Don't always look at the front, look at the news, and if the news is good, then look for upside movements. Always look at the risk out there. People are far more risk averse at the moment because of the nature of the market. If you're an institutional person trying to invest in something, you would obviously want to place some of your eggs in something that's less risky than the other vehicle, and that's all they're doing at the moment. So take that on board. So when you start seeing news that just doesn't play ball, look at the reasons behind that, and I can guarantee it's probably more the risk side of it. Other than that, I'm going to leave you with that, and I'll see you first thing tomorrow morning. Just please, if you are using this template, back it up with the sound money management. Follow the rules of this template. Very, very important. There are 4 rules to this template. You need to be following each one systematically. You have to keep trading mechanical. Leave the emotion at home. Leave it in a cupboard. Stick it in the drawer. But don't trade with emotion, guys. This is where people come unstuck. It's far better to have a template or strategy that's very mechanical. Okay, and that's the beauty of this template. So if you're interested in finding out more about this template and you aren't using it, please drop us a line at info@sereneeducation.com. We'll take you on board. We'll show you how to use it, and we'll show you how to become very profitable using a system like this. It's very, very good. If you are if you're interested in getting into Forex and you haven't had any prior experience, we do offer an online course. So if you're interested in that, please go to the site online at www.forexmadeeasy.com, okay, for further information. Otherwise, I'll leave you guys. Have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.